Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, the Australian dollar remains weak after the price action overnight looks further towards that trigger level of 75.95.10. Although into today's session we may see a small response of a bullish bias from this level, I do anticipate eventually this trigger level to be breached and look back towards the recent lows of this month that comes in around 74.80.90, as you can see here. Any fresh claims to the upside beyond 76.55 should still find the multi-month highs around 77 figure 40 as a potential cap. Well, with little overnight action for the euro, mainly due to the fact that Janet Yellen said nothing on monetary policy. So the euro is now declining and looking back towards the first support seen at 107.55 with the trigger level seen at 107.05.20. Now, as I've mentioned before, fresh attempts towards the upside I still view towards 108.20.50, as you can see here in January and also back in December, as a potential sell or supply zone. And I do expect to see further weakness coming back to the euro, especially when you're looking at these dailies. They are looking a little bit tight and also near the top side of the range. Well, dollar yen went straight for the target of 110.60 overnight and posted a low of 62, however not recovering. I am still a little bit concerned on how this price action is coming around. Now today we do need a bounce from this level, otherwise we could see a break and open the way back towards the lows that we saw in October last year around 107.40.80. But before we get too bearish at the bottom side of the range, let's see how the next 24 hours plays out. And if we do get a very bullish response, then the immediate target comes in at 111.65.70 and then up towards 112.55.65. So the pound continues to press on a little bit higher. Not the bullish of bull moves overnight. Currently trading around 125.15.18. You can see here that the resistance is expected to hold around 125.55.75 from the recent highs of February and also around this region here towards the early February. Now, in light of the current technical pattern, we should see eventually a turn away from this top side target that holds around 125.55.75 due to the break of that downtrend that we had recently at 124.80, with the immediate support coming in at 124.55.65. Now, a break beneath there would give further scope to the downside and reinitiate the target to 123.65 to 122.85 or maybe just a little bit lower to 122.20. Well, the gold pattern overnight went straight for that target again at 12.52, and as you can see, clearly rejects that level after printing a high of 53 and plummeted down towards the support of 42 and holding. As you can see now, the market is, from a 4-hour time basis, weak, and I expect to see this decline to continue into today's session with immediate target holding towards either 42 to 38 with a slight firmer base at 28. And to wrap up with silver, while the market is slowly clawing to the upside, and as you can see here, the resistance now comes in around 17.60.80. With the technical pattern not fully bullish, but only very slightly to the upside, we should see a rejection from this level, and I expect to see a move back towards 17.05, and beneath there, that firm base that holds at $16.60. So that wraps up my daily video. Thank you very much for joining me, and I hope you have a great day ahead.